Hello and welcome. You're watching Your Trades on ET now with me, Snehisha, and with me as always is Priyanka Uppal. Priyanka, what a bloodbath on the street today. Very bad trading session coming for us, at least on the spot basis. When you take a look at what happened to Nifty, Nifty slipped below the 100 DMI for a first time this year, and bad moves really coming in on the Nifty today. Nifty ended the day with a cut of more than 1.5%. 345 points low is where we've ended, below that 22,000 mark at 21,957. Sensex is also in tandem with Nifty, down almost 1.5% as well. More than a 1,000-point cut coming there on that front as well. India VIX has seen a spike of 6.5%, but it's understandable on a day like this where you're seeing very sharp cuts coming in. Nifty Bank also 1.1% cut in the red. 533 points lower is where Nifty Bank is. But well, the real losers, if the sectors that have done even worse than Nifty today, are the broader markets, because Nifty mid cap has ended the day with a downtick of more than 1.5% as well. But Nifty small cap, that one was under a lot of pressure today, down more than 2.8% in today's trading session. Let's take a look at some individual gainers and losers. In terms of sectoral indices, Nifty Auto is the only index that has managed to end the day in the red, and that also on the back of a few select stocks from the Nifty 50 counters that aided the Nifty Auto sector, the likes of Tata Motors, M&M and Hero Motors. All of them have clocked in good gains today. Hero Motor up 3.2%, Tata Motors and M&M up around 1.5% each as well. Biggest loser for the day today, Nifty Energy and Nifty Metal down almost 3% in today's trading session. Nifty FMCG also down 2.5%, followed by Realty, Pharma, Media, Nifty Bank as well as Nifty PSU banks as well. When it comes to the biggest gainers today, like I mentioned, TVS Motor, Hero Motor, Tata Motors, DVR, all of them have aided auto as well as the markets today. M&M Bajaj Auto did pretty well as well, but this is about the auto pack. When we take a more wider look at what has happened in the markets today from the winners and the losers, on one side you have Piramal Enterprises down 9% in today's trading session on the back of some very weak numbers coming in yesterday. Manappuram Finance and Muthoot Finance, these were the two stocks to talk about today as well, because Manappuram is down 8%, Muthoot Finance also down deep in the red on the back of those norms that we did see coming from RBI, where they've said that not more than 20,000 rupees can be disbursed at once under a cash segment when it comes to these loans. We did manage to speak to the management of Muthoot Finance as well, and they came on board and clarified a few things, but the stock nonetheless ended the day in deep shades of red. But Priyanka, lots of other newsmakers today as well.
Absolutely, Snehi. The biggest worry is that we saw it was a deep red color, and we are still closing, and carry forward is all aggressive shorts. Aggressive short built up on Nifty, Bank Nifty. In fact, Nifty is nearly its 100 DMA support. Bank Nifty has already fallen its 50 DMA support. VIX has again spiked nearly 7%. So the volatility seems to be increasing day by day. It's I think it's 10th or 11th consecutive day that the VIX is spiking. FIs are continuously selling. We've slipped post-April to 2019. We have slipped for the first time below 22. In fact, we've closed also below 22,000. Expiry week, there was no sign of pullback throughout the day, and we now go further. There's one more day left in this whole week, and then of course it's just 3 phases of voting which has already been done. What is worrying market is of course the volatility, the pre-election jitters, but the numbers are also not able to set the tone right. Earnings, SBI was a beat. However, it did close in green, but then it was beat on NII, PAT. Slippages were down, but then also it did not lift the momentum for Bank Nifty. L&T was the top loser. However, there was some disappointment in aspect of order book. Order book did expanded on Y&Y basis 22%, but then there was some contraction on Q&Q basis, and it was one of the top losers also. Asian Paint volume beat was all there, but then it was offset by a margin miss. Decorative business, there was a growth, but then these earnings are also not able to cheer the market wherever there is a good support. SIP numbers also could not cheer the market today. Monthly SIP crossed 20,000 figure, first time ever. Equity inflow, however, is at 4-month low. It was again, the reason could be KYC impact maybe. Large cap flow reduced to 357 crore. It was spiked. We did see a spike in the month of March. Maybe that was a closing month. Maybe that was one reason. But then inflow resumed in mid cap and small cap space. So there has been a couple of good factors also, Snehi, but the market is completely shrugging it off, all because of pre-election jitters. But what lies ahead now? Where should index take us now? Kunal joins in to talk about the technical levels. Kunal, good afternoon. This question would be here that where should we find support now? We've closed even below 22,000. Crucial supports. Bank Nifty has fallen 50 DMA. Nifty is nearly 100 DMA. What should we expect from the any pullback signs that you see on Friday?
Well, I think maybe it's mild bit of a pullback is something which we can expect for the indices. But you know what, this week's price action broadly has indicated that it's dented the trends for the Nifty decisively over the last, something which was shaping up quite well over the last few weeks and as well as over the last few months. Because on the weekly chart, I think if we close at sub this 22,000 mark, we could be going into at least a 7 to 8 week kind of a fresh, in fact more than 10 weeks of fresh swing low for the index, and that generally doesn't bode well for the indices. The bigger concern for the markets are not just these technical levels, because it's part and parcel that the markets into an ongoing trend, gets into an oversold territory, sees a bounce back, and then a resumption of the trend. The bigger concern is the large cap names in the slew of large cap stocks which are now threatening to go as well as break below their 200 moving averages. So just 1 month back, the likes of Dr. Reddy, LLT, etc., they were trading comfortably above the long-term moving averages. Now they are just 0.5% to 1% odd away from breaking below their 200 DMA. So that I think is a bigger concern, because you already have names like HDFC Bank, Bajaj Finance, etc., which are trading below their long-term moving averages. So the more the number of large cap stocks they tend to go below their long-term moving averages, the more the pressure for the indices going forward.
Alright, Kunal, before we come to you for your picks, let's address a question that I'm sure is in a lot of investors' minds. After today's fall, would you now believe that it's a good time to buy now that the markets have significantly come lower?
No, not really. I think one should not venture into buying, at least at this point of time, on the indices broadly, because in such kind of a sharp sell-off, typically we've seen that the index gets into a double test of a major support. So there could be a 1 day, 2 day temporary relief for the indices. You can probably try and play out for that. But the medium term trend, they generally get broken down into such kind of a market texture. And also have to look at this way that many of the large cap stocks are still showing signs of consistent weakness. So I think in that aspect, maybe over the next 1 to 2 weeks or over the next 2 to 3 weeks, we could see one more round of correction. That could probably be a good level where one could look to start chipping in.
Then Kunal, in this sense, what we make out of it, that one should avoid going long. So are you suggesting some short trades here?
No, so I think I would still believe that stock specific, and especially for few of the stocks, there are still better opportunities available. For example, the first one is Aditya Birla Sun Life AMC. That stock apparently has been doing exceptionally well in the last 3-4 days, 3-4 weeks, as well as over the last few months. And that stock is still holding on to that 500 plus breakout point for itself. In fact, today the stock in the opening session made a fresh swing high, trading about that 550 plus mark. So that's a stock which looks attractive. Would look out for targets of 580 on the upside, stop loss at 525. And Cipla could be the other stock which I believe could probably try and come back into action, because my sense is that when the markets get into a high volatile zone, defensive sectors like FMCG, Pharma, etc., they are the ones which gets a stronger degree of outperformance. So would recommend Cipla in that aspect, targets of 1400, stop loss 1340.
All right, Kunal, thanks so much for joining us, chipping in your view and also sharing with us your stock picks. On that note, we'll let you go. So Aditya Birla Sun Life and Cipla is what Kunal is picking out amid a market like this. But let's go across to my colleague Shrishti, who's joining us in the studio with her take on the technical charts today. And Shrishti, I have to be honest, I'll be really surprised if you have a breakout counter even in today. Do you have one?
Well, yes, we have one of the breakout candidates and one on the breakdown side, because in the falling market, there were some of the counters that were holding them pretty well. So let's get the cheer on the screens then, and on your screen you will see Sun TV. This counter was doing pretty well at one point in time, higher by around 3 to 4%. But what was interesting to see that the stock managed to hold its above its 20-day moving average. It managed to cross its earlier resistance of around 670 odd rupees. But today's move was also supported by a long build-up. Just a day back, the stock gave a good green candle and then is continuing its upward trajectory. So that is Sun TV on the charts, because earlier you will see that the stock was actually taking a support at its 20-day moving average, then was continuously in the downtrend, and then once again trying to take a support at its 20-day moving average at every dip. So this is the first stock on the breakout side. Moving on to the next one, we do have a breakdown stock as well, and that is ONGC, because the oil and gas space was clearly under pressure today. And what was interesting on ONGC is that this was a trend line support for ONGC, which finally got broken, and a rejection exactly from its 20-day moving average is what we have seen. Needless to say that there was short build-ups on the derivative side as well, but all in all, this is the breakdown stock that we have spotted. So back to you guys, one breakout stock and one of the breakdown stocks.
Thanks very much, Srishti, for highlighting both the stocks here. Let's go further and let's get you the word from the wise. Nilesh Shah, MD Kotak AMC, is bullish on the private banking space. What factors are driving the growth? Let's listen in to what is his rationale.
RBI has been managing liquidity fantastically, and slowly and steadily deposit growth, while it is coming down, it is still in double digit. On credit growth, corporate India capex should pick up post-election. Retail loans are, slowing down a little bit thanks to the risk weightage increases on a proactive basis. But overall, deposit and credit growth will still be in double digit. Is there any worry on NPS side? Answer is no. Our banking system is more healthy than ever in the past. Now, NIMs are coming from historically high levels to little lower levels, but valuation corrections are significant. We have rarely seen private banks trading at this kind of valuation. There's almost a grouping of all the banks in just one cluster. I think there will be a breakout over there over a period of time.
All right, that's the word coming in from Nilesh Shah on the banking space. But with that, let's slip into a very short break on this edition of Your Trades. We'll be right back with more stock-specific news and action about the day that went by. Stay tuned. Hi there, welcome back. Thanks so much for staying tuned to Your Trades. Let's take a look about the big story of the day, and that has to be NBFCs, particularly gold loan NBFCs, and they were under the lens today, under the RBI lens, because RBI came out with a mandate that said that NBFCs cannot disperse more than 20,000 rupees in cash. So let's take a look at some brokerage notes that are assessing and gauging the impact of this norm on NBFCs. Let's start by looking at what Systematics has to say. They believe that it impacts 30 to 35% of Muthoot and Manappuram's gold loan book. Significant impact in the near to medium term on business growth and margins is what they're penciling in. They believe that NBFCs will have to now dole out discounts to convince customers to accept disbursals digitally other than in cash, and this will also lead to a fall in their yields, and cost of bank borrowing is expected to rise going ahead as well, and they expect moderate FY25 growth on the back of this regulation. Moving on, let's talk about the word coming in from Morgan Stanley. They believe that this norm will have a transitory but a manageable impact on players like Muthoot and Manappuram. They believe Muthoot will be impacted more, followed by Manappuram. Gold loans make up 84% of Muthoot Finance's AUM and 51% of Manappuram's AUM. They believe Manappuram will fare better versus Muthoot under these new norms. They continue to remain underweight on Muthoot and overweight on Manappuram, but what's interesting to note is that Manappuram has slipped more than Muthoot Finance in today's trading session. Although the stock price and the stock move is different, but Manappuram has slipped almost 8% and Muthoot Finance is down 3.5% today. Lastly, let's also take a look at what Ambit is saying, and they see a one-time impact on NBFCs. They believe Muthoot may see disruption for 1 quarter, but they've gone ahead and reiterated Muthoot as their top buy. So, well, this is what the brokerages on the street at large is gauging in or penciling in when it comes to impact on the back of these RBI norms. But we also managed to speak with the management at Muthoot Finance earlier in the day today. Listen into what he believes the impact of these norms will be on his company. Listen in.
RBI, Reserve Bank, wants to instructing that it is clarifying that more than 20,000 you should not pay in cash. That's a simple part of it. And I don't think there is any impact on that, because we are even otherwise, most of the customers have bank accounts and we have been doing real-time transfers a long time. So it is just a question of time for we have to just tell our customers that, yeah, instead of cash, if you were to take it through bank, it's not an issue at all. And we don't see any big challenge there.
All right, moving on, the big numbers which came in today. SBI posted upbeat set of numbers and did close in green also. Asset quality improved significantly. In fact, there was a sharp fall in slippages in Q4, slippages which declined by 22% in quarter basis. Interest income, it was a upbeat on NI front, it was upbeat on PAT front, PPO front, and of course slippages which came in sharply lower today. Another set of number which came in from Asian Paints, but this was a big miss lower than the estimation. Q4 price cut which weighed on the revenue growth. Management, however, remained confident about the demand pickup, but the numbers, if you talk about the scorecard, the revenue was missed, margin was missed, and so was PAT. And volume growth we did see, especially from the decorative business. The volume growth was good enough for the last quarter. It was around about 16%, but then overall it was a miss.
Well, all right, good set from SBI, but an overall miss coming in from Asian Paints. But other than all the stocks we've discussed today, what's the other list of stocks that were up in a buzz, or in fact, should I say down in a buzz in today's trading session? Winnie is standing by with a list of all of those stocks.
Yes, so the important stocks that have been in focus today, we have TVS Motors that we are keeping an eye out on, reported its numbers yesterday, and overall brokerages are giving it a thumbs up. The street also gave it a thumbs up today in trade. When you look at it, TVS Motors was surely gaining in trade. Jefferies maintained a buy after the numbers, target price of 2,525 rupees, while Goldman Sachs also said that Q4 numbers were a beat versus their estimates. We saw the average selling price that was up also higher than what the street was expecting, and that is why TVS Motors was buzzing in trade. We have HPCL that reported its numbers. Not a great set of numbers that came in from HPCL. Bonus was not something that was very exciting, and there was a miss that came in terms of the EBITDA margins of the company. So because of that, we've seen HPCL that is a bit under pressure. PEL, that's Pharma Enterprises, that reported its numbers. The NII was down by around 11% on a quarter-on-quarter basis. Operating loss of around 106 crores versus a profit that we saw in the last quarter as well as in the last year. Management is furthermore saying that they are expecting further reduction in terms of the book by around 600 to 700 crores in FY25 for the 10% of its AUM, which is 10% of its AUM. NIM is something that could maybe be a bit under pressure going forward, so keeping an eye out on Pharma Enterprises, because that surely saw a sharp pressure in trade today. And lastly, Tata Powers, that was another stock that was under pressure after the Q4 numbers saw a bit of a weakness there, and that is what caused a bit of a pressure. Tata Powers clearly was something that was under pressure today after its Q4 numbers were a miss.
All right, well, viewers, with that, I'm afraid we're completely timed out on this edition of Your Trades. Thanks so much for watching. We'll see you tomorrow.
If you like this video, then like, share and subscribe to ET Now.